Are you fed up with paying rent? If you listen to the news about the rising housing market, you'd think that paying rent was your only option. However, along with the rising housing market is rising opportunity. Record low interest rates and a growing economy are allowing many to make the move into home ownership. You can too. Real estate markets are cyclical. They go up and down. In order to build wealth, an individual must be able to recognize a wealth-building opportunity. Remember, this is a cycle, so what has gone down will most certainly go back up. And that is where we are now in the cycle. Pride of ownership is the pillar of the American dream. But there are more benefits like help from Uncle Sam. It's true, home ownership puts money into your pocket. Here's an example. Jim and Mary each make $70,000 in taxable income and are in the 25% tax bracket. Jim is a renter, and Mary just purchased a $400,000 home at a 3.75% interest rate. By the end of her first year, Mary has paid out about $19,600 in interest and property taxes. Since Jim has no tax deductions, he owes over $17,500 to the government. Mary, on the other hand, can subtract both her mortgage interest and her property taxes, reducing her taxable income to just over $50,000. Mary's taxes are now about $12,600 compared to Jim's of $17,500. Mary has an annual savings of about $4,900 or over $400 per month. So in a way, Uncle Sam is helping Mary pay her mortgage by contributing over $400 per month she would not have received as a renter. Home ownership allows you to build wealth. Assume a home was purchased for $400,000 and it increases in value by only 3% per year. After 10 years, the home would be worth nearly $538,000, while the loan balance is reduced to about $307,000. That is a gain of nearly $231,000. Now, let's take it a step further. Remember Mary from our earlier example. Let's assume she purchased this home and decided to rent it to you. Over 10 years, she makes her mortgage payments with the rent you paid her, yet the gain $231,000 belongs to Mary. Getting the picture? Now, let's talk affordability. Historically, down payment has been a major obstacle to home ownership. There are many buyer programs available that can now get you in for less than move-in costs to rent an apartment. Some are even zero down. So, what about payments? Because of low interest rates, some mortgage payments are now comparable to rent. Here's an example. In a recent survey of 3-bedroom, 2-bath homes in a $400,000 to $500,000 value neighborhood, rents range from $2,400 to $2,800 per month. The total payment to purchase a $400,000 home with an FHA loan of 3.5% down at an interest rate of 3.75% would be approximately $2,580, including taxes and insurance. But after factoring in your $400 per month tax benefit from Uncle Sam, it feels like only $2,180. Compare that with rent. You have just seen how you can own a $400,000 3-bedroom, 2-bath home for less than move-in cost of renting, and with monthly payments lower than renting a similar property. So, if you're paying rent, you are already making a mortgage payment. You are landlords. If you are fed up with paying rent, call 310-345-7096 and get your piece of the American dream before this opportunity passes you by.